Hello, welcome to Real Talk with Wit. We talk about love, sex, money, and everything in between. And today we're talking about money. Actually, specifically, we're talking about taxes. I'm calling today's episode Attack the Taxes with Susan. My mother, the one, the only, she's a retired CPA, and she's here to answer all your burning tax questions. We're going to address things like, what if I get a notice from the IRS? How do I be careful about being red flagged for something? What if I get audited? Biggest fears, worries that many of you have. We're going to try to do our best to answer all those questions in this episode. So recently I was on the phone with my mom telling her how I was feeling, and then I was doing this previous podcast. And we started talking about what are all the questions people have about taxes. And she could just answer them with such strength and such knowledge that I thought I would share her with you today to answer those powerful questions. And we're so excited. Yeah? Are we excited?
Yeah.
We're working together on this one. So
Yeah. Awesome.
Yeah. So I just want to make a disclaimer that this podcast is for educational purposes only. It's essentially, my goal is to just to help people and to share personal stories and as much information as possible, exposing those dark, dirty details that people don't really like to talk about. People are afraid of talking about money, especially about taxes. So we are talking about it. But if you are in need of a professional CPA, a tax attorney, anybody who could help you out, go seek that. We're just here to give you advice. And I know my mom wants to also make a disclaimer. She is a certified public accountant, but she is coming here today in a retired capacity. So again, seek professional help if you need it. So I would like to get into our questions. Let's get to the heart of it. Let's add value to people's lives right out of the gate. And my first question to you is, what do you think the biggest fear is when it comes to taxes for most people?
That they're going to owe a lot of money and not be able to pay it. And the IRS is going to seize their house or put them in jail.
Yeah. So I would say when I realized I was going to owe $10,000 that I couldn't pay, that was literally the first thought that came into my head. I was like, oh my gosh, what's going to happen? I felt a lot of shame, embarrassment. But deep down, I knew that I wasn't the only one that had gone through this before. So tell us about that reality. The worst fear is that your house is going to get seized, everything is going to be taken away. What case does that actually happen? Help manage people's fears for us.
Yeah, I know when people get a notice from the IRS, it's for multiple reasons. And it's usually not for anything that severe. So jail time, house seizure, all that sort of thing really is for people who intentionally hide assets and money on purpose. Their goal is to not pay any tax, and they illegally hide that information. And most people are not like that. They want to do what is right. And so when they find a letter that comes in the mail from the IRS, they're afraid of the government. They're afraid what the government's going to do to them. But first of all, speculation is the enemy of peace. So don't speculate about what they want. Just read the letter. And second of all, procrastination doesn't make things better. It makes it bigger.
Yeah, and I would say that when I was on the phone with you and we were talking about taxes, you made that specific quote when I said, when I didn't know if I could pay this tax bill, I went ahead and filed my taxes anyway. And a lot of people, when they can't pay the tax bill, they have all these fears. They imagine the worst case scenario and then they avoid it. They do not file their taxes. And that's when you said to me, procrastination doesn't make it better, it makes it bigger. And I was like, oh my gosh, yes. So if you're somebody who doesn't know how you're going to pay your tax bill, what would you say to them?
Well, first of all, relax and breathe out. The most important thing is that you file a return. I met a woman one time. I let her know that I was an accountant, and she wanted me to help her with her taxes. And that was like the first thing she spoke to me about. She finally told me she hadn't filed taxes in 4 years. So she lived and breathed the fact that she hadn't filed her taxes. Well, don't do that. File your taxes. Get someone to help you prepare your return. The IRS has many ways. There's many ways to pay your tax bill, and they will work with you. When you have a sincere heart to pay your taxes, you can talk with them. You can get a tax attorney. A tax attorney can be your advocate in that situation and can really provide a lot of help with the total bill, even though you may have to pay them, but it'll be worth it in the end. And you'll learn so much about the tax law from that. But the first thing is, do not ignore notices and file a return no matter what.
So I have a question. What if you get a notice? What are the first couple steps that somebody should do if they get a notice in the mail from the IRS?
Well,
or their state taxation office.
Right. So before I address that question, I really want to address preventing getting a tax notice. First of all, as I've said, you need to file a return. And estimates are okay. So say you're not filing a return because you don't have all the information that you need. It's okay. You can file your return using estimates. Now, the thing is, you want to be as accurate in your estimate as possible in telling the truth, and that you will be able to support what you're estimating eventually. And a lot of times, I have estimated my income in the past, or my expenses in the past. But if the IRS doesn't come back to you and audit you, it's not that big of a deal. So it's better to file your return and give them at least what you estimate belongs back to the IRS than to ignore it and not do that. So to prevent your notices, you need to make sure that you are giving accurate estimates, and that everything is supported, so that when if they do send a notice, you have all your ducks in a row already. You know what you're going to have to look up.
That's great. That's super helpful. So if you get a notice, read it, obviously, and then communicate with them.
Communicate with them is very, very important. So read the notice carefully. If they're asking for a great deal of money, and I would say $10,000 or more, you need a tax attorney. And if they're not, just read what they really want. Don't give them anything more than they want, because that could open yourself up to more inquiry that you don't need. So just breathe, for one, and read it. And if you don't understand it, you can call them up and ask, and they'll explain it to you. One time, I have to tell you, I forgot to file a partnership turn on time. I didn't realize they had changed the due date, and they sent me a notice and said, you owe us $300 for a late return. And I'm like, oh my gosh. So I called them up and I said, you know what, I've just started doing this, and I didn't know that they moved the due date, and I said, can you reduce this fee? And he said, well, what do you want me to reduce it to? And I'm like, well, $50. And he said, how about $0? I'm like, yeah, I'll take $0.
Who wouldn't take $0?
I mean, this is the IRS I'm talking to. And he was so nice. And he just said, make sure you file it on time the next time.
That's one thing I brought up in my previous episode is like the IRS, those are human beings. They're dealing with human beings. So don't forget, if you're in a really big trouble, just give them a call. And that also includes your state taxation office. Because I have gotten letters recently because I did a shift in my business structure. And so I have to account for more things. So I'm getting letters, and I feel very fortunate this time around. I have a CPA firm who I've hired who, when I get these letters, I read them. Sometimes I have to say it's like reading hieroglyphics. I'm like, what does this mean? And I have to Google it and have some basic understanding. And then I call up my CPA firm and I say, hey, look, guys, I got this letter. Can you please, manage this or handle this and let me know what's going on with the status of this? And so that is the privilege of hiring a CPA to back you up. And I would say that was the biggest thing that I took away from my big money mistake, tax mistake, was that you need a couple people in your court. Like, you cannot do this alone. Like, at the end of the day, you can't do it alone. And it's worth the money to pay for somebody to support you when it comes to taxes.
For anyone who is using, the online softwares, they're great, but unless you have an education in tax, they are not necessarily good for a complex tax situation. And I would recommend, if your tax situation gets beyond a 1040, that you need a tax expert to help you through that situation.
I would say, to go along with what Susan just said, is that that software is super helpful for the basics, or going to H&R Block or whatever, going to just a regular tax preparer. But the more you begin to want to save on taxes, the more complicated it does get. But that's actually a positive, because you start really saving money, because you're starting to get real smart and paying attention. And the other thing on top of that is tax laws are constantly in flux and changing, and they're specific to your state. So that's another reason to have an expert on your side, because they're going to know the tax law a little better than you, even if you educate yourself, which I'm all for. I support that. Definitely educate yourself on taxes. You have to know, not as much as your CPA or your accountant or your tax attorney, but you need to be at least able to have a conversation about it, for sure. But those support members are so paramount. That's, I hired not only a CPA firm, but a tax attorney to help me with my business structure. And I just could have not gotten untangled without that.
It's better to do tax planning than tax paying.
Yeah, let's talk about that. I would say a lot of people, they're Googling, how do I save on taxes? How can I pay less taxes? And the answer is tax strategy and planning. Talk about that a little bit.
So for tax planning is important, especially if you have a complex tax situation. Whitney in particular, she was able to restructure her LLC into an S Corp, and that made a world of difference in her tax situation. But that's not something you're going to think of on your own unless you're educated in those sorts of things. And that takes some legal manipulation as well. And you will save a lot of money on your income tax by making yourself an employee of an S Corp, rather than being a sole proprietorship and paying taxes through self-employment. And then you get self-employment tax, all kinds of complicated things that happen. But you're thinking, oh, I can't afford that. I'm telling you, you can't afford not to do that.
Yes, that's the one thing I think is so important to say, is that if you're thinking right now, I can barely afford to pay these taxes, I can't afford to hire a CPA or a tax attorney, I'm telling you what, it is worth every single dollar. You're right. It will cost you more in the long run. These people could help you save thousands and thousands of dollars in your future self. It will be going into your pocket. So your choice, right?
And it's even a possibility that they're going to save you money right now, no matter what your tax situation is, because they know far more than you do and know how to work the system and be able to get you the breaks you need. So pay for a tax attorney, pay for a tax accountant. You will not regret it if you get the right one.
So I want to go back to something you said. Yes, I did turn my LLC into an S Corp election. It was actually very complicated, and I had studied it pretty thoroughly before I made that decision. And then on top of that, I could have absolutely not done it by myself without the CPA firm and the tax attorney. Let me just be clear. If you are considering that as an option for yourself, first of all, you have to meet several criteria, and I do not recommend doing it alone. Things like setting up payroll, I couldn't have done alone. I've gotten a lot more notices since I've done this move because the IRS and the New York State need to know a lot more about me. They have helped me. A tax attorney set it up for me. I absolutely, if this is something you're considering, because you've heard about it, I know it's floating around the internet, it's a great option, but you must hire a CPA or a tax attorney to help you with the process. I actually don't think I could have done it alone for all the steps you have to take. And I will say this, it's not a simple solution. It's pretty complicated. So if you're looking for a simple tax saving solution, that is not it. So now I want to talk about what it means in terms of being a sole proprietor, self-employed person, or running your own LLC. Is there any tax advantage to that?
If you have a business that you're paying for a lot of your expenses, like your office, you have a home office, you travel for the business. If you have, you buy office supplies, all that sort of thing, you can deduct those from your income in Schedule C and declare yourself, a business. And you have to go and get yourself you can actually declare yourself a business and use your own Social Security number. But I would recommend that you go ahead and get your own employee, your tax ID for your business. So if you are an employee, you can deduct expenses on a Schedule A, but it's not as good an advantage for you on that venue. It's better to flow it through a business.
I just want to say that being an LLC or having your own business, being a sole proprietorship has some great advantages, including write-offs and things like that. But there is a disadvantage, and it's called self-employment tax. What is it? Why do we pay it? Tell us more about self-employment tax.
Okay, self-employment tax really is you are paying your half of Social Security like you normally would as an employee, but you're also paying the employer's portion of Social Security tax.
So, for example, right now the self-employment tax, I believe, is 15.3%. If I was an employee, I would only have to pay what?
Half of that.
Because the employer that I would be working for is paying that percentage.
The employer's matching.
Okay, so as a self-employed person, you're actually paying more taxes than an employee sometimes?
Yes, but you're actually should be paying less taxes because you're being able to have your deductible expenses that you normally would not be able to deduct. If you deduct them on the Schedule A, that goes through a percentage level that you have to have so many expenses before that even comes off of your income tax.
Right. So you're saying the deductions offset the negative of that self-employment.
It depends. It depends on how much you have and if it's worth it. You need to figure out whether it's worth it to you. And in any situation, any current tax situation, you have to figure out which situation or your filing status, or the way you're going to file, is the most advantage for you.
Yeah, and you said this before we sat down to this interview, that every person's tax situation is unique and different to them. So it's something to be considered. What do employees need to be paying attention to when it comes to taxes?
Well, they need to be paying attention to how their employers deducting their withholding for state and federal. I had years ago, I had problems with an employer. I was working in different states, and I moved between employers or something, I don't know, but they didn't even deduct any sort of income tax. I moved from a state that wasn't charging income tax to a state that was, and they never figured that out. And so I owed the state that I moved to a lot of money because they never withheld any of that, never had any state withholding. So also, you need to sort of figure out they give you that W-4 form to figure out what you're supposed to have deducted from your paycheck. So be careful with that. It says in there sometimes, it tells you that if you didn't owe any tax the prior year, and you don't think you're going to owe more than you did last year, that you can keep your deductions the same. But you really need, if your tax situation changes, you really need to figure out what you need to do as far as withholding. You have control over that. You can tell your employer to take extra money out, or you can file an exemption type form that says you're exempt from withholding. I mean, it's from one end of the scale to the other. So as an employee, you need to pay attention to what they're deducting from your paycheck, especially if you have more than one job, or if you've changed jobs in the middle of the year, or if you're working remotely. Working remotely today does create complexity in your tax situation, because a lot of employers are still trying to figure out what kind of withholding they should take from your paycheck.
Well, what do you mean working remotely has changed the way employees are getting taxed?
Well, your employer is supposed to deduct withholding from your check based on your home state. And that means where you reside as a resident. But if they are in another state, they may deduct taxes from your check based on that state. Or if you traveled to one of their clients in a different state, they may take taxes from your check from that state. So it gets complex. So you need to be aware of that.
That actually happened to me. I was traveling to a state for 3 or 4 days for work, and I had to pay taxes to that state. And I Googled the heck out of this. I did not know this was a thing because I travel so much for work, and I think it's one of those gray areas when it comes to taxes. Not everybody's aware. Your payroll's probably not fully aware. You're not fully aware that sometimes things like going state to state for work, even if you're only there for a day, if you're making money in that state, you actually have to pay taxes sometimes. But it depends on the state. They all have different laws and rules. So it gets really complicated there. And the other thing I want to say is to all you employees out there, just pay attention to your paycheck. Look on there. Are they taking the right amount? I mean, I know there are situations where they take too much. That's happened to me before. You got to pay attention. You have to be accountable yourself. Do not trust the payroll to just do the right thing for you. I know that you had a recent situation that happened to you. Why don't you briefly tell us a little bit about what happened to you with your paycheck and you realized that you were getting the wrong amount of taxes taken out and you noticed it?
Yeah, that's when I changed employers and states, and I noticed that my net pay was a lot less for my new job than it was for my old job. I mean, a lot less, like $400 a paycheck less. And I'm like, what is going on? And I sort of ignored it for a while. And then I'm like, oh, something's wrong. So I decided I better look at my withholding statement. And sure enough, they were taking way too much tax out of my paycheck, that to the point where I was going to get back like $14,000 from the IRS if I filed my return that year.
Oh my gosh. And I want to say, this is a great jumping off point to say, when the IRS owes you money, it is not free money. It is actually money that you lended to the IRS to go invest it and make money themselves. That is not in your pocket, that you didn't have access to, that you could have invested and made money off of, or bought that new car or whatever it was. So just to be clear, I feel like a lot of people, they get their tax refund and they're like, oh my gosh, free money. I'm going to just go spend this on a vacation. But what the reality is you in fact loaned the IRS or your state money and you overpaid and they owe you now. So do not treat that money like it's free money, because it ain't, is it?
No, there's a balance, and that's, where you need to be educated about yourself and how you manage your money, and your income and how it's going to go. And if you're self-employed, you actually have to make quarterly tax payments, or you'll get a penalty at the end if you are under withheld, so to speak. But on the other side of that coin, especially if you're an employee, I think that tends to happen more, that you get over, you end up overpaying, you get money back. But as Whitney said, you're just lending the IRS your money. So just pay attention to that and try to figure that out. And if you want to loan the IRS your money, that's your choice.
They'll happily take it and return your money back on their time schedule. So,
and without interest.
Yeah,
but if you don't pay them, then you have to pay them interest.
Ooh, yeah.
So there's a fine line.
Yeah, absolutely. I want to move on to, what should people be looking out for when it comes to red flags that might get the IRS's attention if you do it maybe on your tax return, or something that tends to just in general be a red flag when it comes to taxes?
Well, if you've been a W-2 earner and your income has been very steady, and all of a sudden you report a lot less money than you did the prior year, maybe half, that's a red flag for the IRS to check, because they're looking to make sure that you're paying all that you've earned. If you're in particular self-employed, that's also a red flag. If you all of a sudden your income is really large and all of a sudden it's really low, because they're looking to find out that you didn't report all your income. So you may get a letter on that. I would, and
I just want to say one thing about that that's so interesting is I do feel like the pandemic kind of threw people off kilter when it came, a lot of people got laid off, or work was hard to come by. So I know that there were some dips there and during the pandemic, and I'm sure they were super aware that the economy was kind of in a very strange place between 2020 and 2022. Even now, people are just now recovering, even though we're in a recession right now.
Right.
What else is a red flag that comes to mind?
Well, if you're self-employed, large amounts of expenses in maybe an unidentifiable category, miscellaneous, something that you, or depreciation, if you have an extra amount of depreciation than you did the prior year, they may ask questions about it. But usually that's only on returns that are worth their time. So if you're a little guy, you don't worry about that too much. But, they do random audits, but I think they do them only according to a certain level and a certain amount of income. So, red flags to the IRS are supposed to be a secret.
Top secret, huh?
Top secret.
Okay.
So just do your return the best way you can.
Yeah, and I would say the one thing that I just want to add to what you're already saying is that as long as it's a reasonable amount for a certain category,
yes,
it's not going to be something off-putting. So I know that one thing that I learned when I was learning more about taxes is that how you evaluate maybe your salary if you're doing an S Corp election, or how you evaluate maybe an expense you pay, is based on what is sort of the industry standard in which you spend this type of money on this particular thing. Like equipment is a prime example. Like, I'm going to spend more on equipment because I own a production company. That's reasonable. You're going to go out to dinner. Maybe you're a very high level, industry. Going out and having, $200 per person meal isn't weird. It's an industry standard, maybe in your particular work situation. So it seems like it's all about whatever's reasonable.
Yes, but those areas that you mentioned are high areas that they check, and that is home office expenses, especially rent and that kind of thing, and entertainment and meals and entertainment are high places of audit, and it can trigger audits.
That makes sense. And I remember I did my office as a tax write-off, but you're only allowed to, you can do it two ways. I'm not going to get into all the details of that, but you're only allowed to actually use the square footage of the space that you're actually using for your office. You can't just be like, I'm going to write off my whole apartment. Right.
Yes, that's true I'm glad you brought that up, because that's true also for electricity and your phone, any of your utilities. That all should be based on the percentage at which you actually use it for your business. You can't write off all of your electric bill or all your phone bill or anything else that's would be for your whole house. And it has to be a designated place. It can't be multiple use. It can be multiple use, but you're going to have to divide the percentage between non-business use and business use. The same thing with a vehicle. If you're deducting mileage or depreciation on a vehicle for business, you really should have that dedicated to your business. If not, you're going to have to figure out what part is personal and what part is business.
That's great. I'm hoping this is very helpful. I know some people's brains are probably swirling right now with all this tax information, and I want to assure you that you can educate yourself on this stuff. Read some books. I will put some recommendations in the description below of several books I read, including the tax and legal book, Strategies by Mark Calder. That book really helped me throughout a lot of this process. I will drop those in there. Anybody can educate themselves on taxes. I cannot believe they don't teach this in school. Let's get real here. That's crazy. They don't teach you anything about money in school. It runs our lives. And we think about taxes like the first day you get a paycheck in your life, you're thinking about taxes, and yet we don't talk about it. I want to talk about auditing. What's the reason somebody would get audited? And why is it not so scary? I feel like if you're prepared, it's not so scary. It's still scary.
And I wanted to make a comment on educating yourself real quickly. Also, the IRS has publications on their website, irs.gov, that you can pick up and read and educate yourself as well with that. And there's different CPA firms that can also provide webinars and that kind of thing. So I just wanted to iterate that. As far as audit is concerned, I pretty much mentioned it already before, is that if you have a variance in your consistent variance in your tax return on particular areas that people aren't typically documenting, like entertainment, meals and entertainment, depreciation, and what was the other one? I can't remember the other one.
Oh, your home office?
Home office, yeah. Like your home office. Those are things that might trigger an audit for you. But the thing is, don't worry about an audit. If you're doing it honestly and everything is supported and you can explain it, you're fine.
Yeah, and I would say the big thing too that I learned a lot about, if that were to happen, documentation, as long as you have documentation to back yourself up, and definitely hire a tax attorney if you get audited, for sure. That's the time right there if you didn't do it before.
Absolutely, because really to prevent an audit, you should have a professional look over your return, because you will be able to find, tax deductions that maybe you didn't find before, but also if you put something on your return that the the IRS is going to say this is not deductible, and then you get a letter that says this is not a deductible item, and you are charged the interest and the penalty on the tax that you didn't pay because you deducted that item.
I just want to ask the question again. Why would a person get audited?
Well, the IRS audits people to make sure that they're preparing their tax returns honestly, and that the IRS is getting all the money and all the taxes that they believe that they are owed. So it is, they do this Every year they select a group of people randomly, or they identify the people that they want to audit. And it all depends on the staffing of the internal audit in the IRS as to how many audits they do per year. So that's why people get audited, is because the IRS does that.
So why do we pay taxes?
Well, our taxes pay for roads and defense, and it pays for whatever else we want as a group of citizens that we want the government to do for us. So if you want to pay less taxes, ask the government to do less.
Oh, and right before I asked her this question, the blooper, it's not going to make it. It's going to end up on the cutting room floor. She said, taxes are political. No way around it, right? So
no way around it. It's who we elect.
All right. So I want to start wrapping up. You've answered so many lovely questions. I'd love to bring you back next tax season. Maybe we'll do a live one where people can put in their actual questions and they can answer them.
Yeah.
I love to do really practical things because I like to give people practical advice. It's something that they can actually go tangibly do in their life. So what can people do to save on taxes right now for themselves? So what can they do?
Understand your tax situation. I think that's the most important thing. That's what Whitney did. That's how she saved taxes, is she understood what her tax position was. Unfortunately, death and taxes are the things that we have to live with, right? So you have, no matter what you do, you're dealing with a tax situation. If you buy something, you're dealing with a tax situation. You sell something, you're dealing with a tax situation. That's the government that we have set up. And that is just the facts of life. So I would just say, educate yourself, get a professional to help you. And that's the best way for you to save taxes, because tax planning, if you're a person reaching retirement age, there is a tax advantage for you to be able to sell your home. There are different tax advantages based on your tax situation. So you have to know your tax situation. And what you can do when you go to sell something or you go to buy something, figure it out so that you can do that and you can avoid tax.
Legally.
Legally. You can invest in tax-exempt muni bonds too. That's another thing that you could do
There's so many
stuff.
There's so many ways to save on taxes, but what I discovered as I learned more and more about it was that you have to plan ahead. So you have to strategize ahead. You're thinking about your entire year from January to the end of December. And as you make more money or things change, which they always will, they will always change. You will be in flux. You'll get married. That'll change your tax situation. You'll sell something. That'll change your tax situation. Mm-hmm. So you've got to plan ahead. And if something is about to change, you can plan for it. So like say you have a traditional IRA and you want to make it a Roth IRA. That has some tax problems that you're going to have to deal with before you do it, even though there's a tax advantage to having a Roth IRA. Planning. And I would say what separates the rich from the poor when it comes to taxes is that a lot of people who are poor or middle class just think that the taxes is something you only think about in April.
Yeah, you should think about your taxes all year long. And also when it comes to IRAs and those government tax deferred, I just want to point out to you that there's a difference between tax exempt and tax deferred. And the IRA is a tax deferred advantage, which means that you will be able to, in some of those, like the Roth is after your taxes. So what you're going to pay taxes on at the end is the growth in that. But if you have an IRA that's pre-tax, that means that you will pay tax on it when you take it out. And with the idea is that your tax bracket is lower. Well, that's old tax
So
law.
old. Oh
That's
my
old
gosh.
tax law.
Does taxes go down? I mean, come on.
No. Taxes never go down. And for me, I'm beyond retirement age actually, and I'm making more money than I ever made in my life. So for me to have to pay taxes on my retirement fund was a shock, hard on me because I had to pay a lot.
Yeah, it's like, why would your goal be to make less money the older you get? The chances are you're going to be making more money. So
Yeah, because you build up your expertise.
yeah, and again, we don't take our advice on whether you should do a traditional IRA or a Roth IRA. Find an expert for that to help you with that. It's just that's some insider information of how much your tax situation can change based on age, how much your money you're making, all the variables. There's so many variables. It really is about variables, isn't it?
Yeah, and part of the tax planning is planning your estate and your investments. You should include any tax advice and tax analysis on all of those things. And even though you may not have a lot of it, maybe you're young and you don't have a lot going on, but I would recommend you get an estate plan now. You get a plan of retirement now. You get your investments lined up because, you buy an $8 Starbucks every day, that adds up. So don't waste your money. Do something with it.
Yeah, and I would say estate planning is actually one of my next steps in my tax strategy because it's really important to do that. It's very, very important. People don't talk about it because it's not very romantic to talk about taxes or estate planning now, is it?
No.
So I would say if you're somebody who's just feeling completely overwhelmed maybe by this podcast, the idea of educating yourself on taxes, I am a personal testament to the fact that you can transform not only how you view yourself, but what you know about taxes. I went from somebody who took very little responsibility for it to somebody who's taken full responsibility for it and knows kind of quite a bit now about taxes. And I have used everything to my advantage. So that huge tax mistake made me a better, financially more confident person. So learn from your mistakes, move forward. And I want to end with one last thing is if you have a tax bill that you cannot pay, like you're about to file your taxes and you're like, oh my gosh, I owe all this money and I'm not going to pay it. I just want to quickly address what are your options. Let's talk about that really quickly.
Yeah, the IRS understands that sometimes you underwithhold, and that's fine for one time, really. They want you to learn your lesson, but they do offer payment plans. And I believe it used to be 8%. I don't know what it is now. That you can spread that payment out for a few years, right? I think it's like 5 years or something to that effect. I don't know. You'd have to check on that. But you also can, some people recommend that you can get a loan for it. So don't panic. The IRS will help you if you want their help. But you can find alternate ways to pay your tax bill. It's okay. Just make sure that the next year you're properly withheld and you don't make that mistake again.
Yeah. If you could leave everybody here who's listening with one piece of advice when it comes to taxes, what would you say?
I would say, let your heart not be troubled.
Ooh, I love that. That's such a great note to leave on. And thank you so much, Mom. This is Susan, the retired CPA, here with you. It was so fun to have you here. I hope to bring you back next year with a live chat with Q&A questions. So go out there, attack your taxes. You got this. You can do anything. I promise you, even when it feels impossible. And don't be troubled, as my mom said. Thank you so much. Bye.
Bye.
This program was brought to you by Dream Machine Productions, LLC, and WhitneyandEllis.com. To find out more about the resources mentioned in this series, you can click on the links in the description or visit www.whitneyandellis.com. We look forward to connecting with you again soon.